Hey everybody, welcome to the Thursday evening Financial Thing live stream. We are back again as we are every Thursday evening. Hope you guys are having a wonderful week. We have a special guest this evening, live from, actually I don't know where he's speaking live from. I'm presuming somewhere in either Gravesend or London, but we're going to have Hiran Patel, who is the Chief Risk Officer over at Kuflink. I've been talking about having somebody from Kuflink come on, and I thought it'd be cool to talk about risk, really find out how Kuflink mitigates the risk factor behind each loan that it takes on and offers to you as an investor. So we're gonna have a really good chat with Hiran in just a few minutes. If you can, just hit the thumbs up on the little YouTube button right there. That'd be really super helpful. Quick look at the remaining month of May. We have May 18th. Capital Stackers, of course, will be here next Thursday, and then on the 25th, ASX Exchange. So May was really the month of guests. I don't think we've ever had as many guests as we've had in the month of May, but I think it's been really good sort of delving into these companies. And last week we had Susie from Peer-to-Peer Finance News, which was really cool. So if you haven't watched that yet, go back in the archives and check it out. She's an entrepreneurial young lady who founded the Peer-to-Peer Finance News. But yeah, we'll continue probably, I would say, maybe August, we'll continue to have more guests on the stream. So we'll kind of get back to regular peer-to-peer finance stuff on a Thursday evening. But this month has been full of guests. So thank you for tuning in. Thank you for sharing, telling everybody that you know about the stream. And also, please, check out our sponsor, Kuflink, who's the sponsor of the stream. Quite graciously, I know many of you watch the stream have got Kuflink accounts, but if you don't and you're on the fence about whether to sign up, it's a great time, especially this evening since we're going to be delving into Kuflink's risk, how Hiran and the team really attack risk. But check it out, Kuflink, you can get up to 9.73% gross returns per annum. That's targeted. They've lent over £250 million for property-backed UK peer-to-peer investments since 2016. Zero investor losses to date. Your capital is at risk, so please don't invest more than you are prepared to lose. And you could sign up. You can go to the Financial Thing website. You'll see a banner on the top of the website there, or go to join.kuflink.com/financial-thing. There's also a link in the description on this video. So plenty of ways to sign up. Free account. You could go check out the user interface, which I think is vastly improved. Personally, I think they've done some really good things to improve the interface on the Kuflink website, which I'm happy about. So yes, hi to everybody from the stream. Let me go ahead and bring in Hiran, just bear with me 1 second here. Let's go ahead and bring him in via Skype. Okay.
Hello, Lawrence. How you doing?
There he is. Okay. Let me bring you up on stream here. There he is. Hiran Patel, live and direct, looking very ninja-like in his black. I like that. A person who's risk will. Yeah, good. What is that? Like a sweater or?
No, it's a polo shirt.
Very nice, Hiran. Okay, I like it. So tell me, Hiran. First of all, thank you for joining and agreeing to do this. Could you just move a little bit to your left, just a couple of inches? Excellent. Okay, because our screen, it gets cut in half because there's two people, so I want to make sure everybody can see you. Hiran, where are you? Yeah, first of all, thank you for joining. Very much appreciate your time. I know you're busy over there at Kuflink, so thank you for doing that, first of all.
No problem at all.
And also, where are you speaking from?
I am actually in my younger son's bedroom. It's a bit of a mess, so I've actually had to put the background on. I would have expected it to have been cleaned by the time I got home, but kids being kids.
You got very specific. I was talking about the location as in where in the UK are you?
Oh, sorry. I'm in Sittingbourne in Kent.
Oh, okay. So I assume Gravesend. I was completely wrong. Where is Sittingbourne?
Sittingbourne is about 23 miles south of Gravesend.
Okay.
So
Okay. So
not
you're pretty
in
close.
between in between Dover and Gravesend, yeah.
Okay. You're a Londoner or a Kent person. Where are you from originally?
No. I've been in Kent most of my life. I was born in Leicester,
Okay.
but I've grown up in Kent for most of my life. Yeah.
Yeah, you got the accent. I can hear it coming through. So the little bit of the London accent. Gosh. So we're just going to dive in. We've got people tuned in live who are really interested to find out more about Kuflink and how you handle risk. You are the officially, I want to get this title right because I got it before wrong. You are the Chief Risk Officer. Is that correct?
Yeah, that's correct. Yeah, yeah.
Chief Risk Officer. So pretty important job, I'd say. I mean, risk obviously is one of the biggest things that we have to take into account when we're doing peer-to-peer loans, and you being in that position is a very important place. So let's just dive into it. Tell me what both of your role at Kuflink, exactly what do you do at Kuflink as that Chief Risk Officer? Do you oversee other people, or are you handling most of the risk on the loans? And how long have you been with Kuflink for? Is this position you've been with a while?
Yeah, I joined Kuflink in January 2019, so I've been here almost 4.5 years now.
Okay.
As the Chief Risk Officer, obviously it involves all things risk, such as internal, external risk factors that may impact the business. The day-to-day, I oversee the underwriting team, and I'm involved heavily with the loan management team as well. Day-to-day involves mainly the lending risk, which requires me to be involved in the decision-making process within various departments, such as the sales team, the underwriting team, the loan management team, dealing with loan repayments. And I'm also a member of the credit committee as well.
Yeah, you have a lot on your plate, it sounds like then.
Oh, most definitely.
So you're definitely working more than 25 hours a week. Is that right?
You could probably triple that.
That's what Gobinder told me. He said, "Oh yeah, that Hiran, he only works about 20 hours a week." So I said, "Nah, that can't be true." He's a joker. So tell me, before you came to Kuflink in 2019, what were you doing before then?
It does seem like a long time ago now. I've worked in various lending institutions in the prime, subprime market. Worked for companies such as Welcome Finance, Equifinance, Loans to Go, Countrywide Mortgage Services, various positions, including mortgage advice, underwriting secured, unsecured loans, asset lending against vehicles. And I've worked in a collections capacity to recover debt as well. So quite a few roles I've done over the years.
Yeah, you've had a pretty diverse career background. How did you find your way into the Kuflink group? How did that happen?
Yeah, actually it was Narinder that approached me. He approached me on LinkedIn. I was already underwriting for another firm. He made contact with myself. We had a discussion, very light discussion, called me in for a meeting, and yeah, it just went from there.
So you got completely poached then, as we call it, right? Headhunted.
I did indeed, yeah.
You got poached like an egg by Narinder, and next thing you know, you're joining the Gravesend team, and you've got as much ice cream as you can eat whenever you go to the office.
Exactly, as much ice cream as I can eat and as many fizzy drinks as I can drink.
That might not be such a good thing. Did you, prior to working with Kuflink, did you know anything about peer-to-peer lending, or did you invest in the loan side of things with peer-to-peer?
So in terms of peer-to-peer, when I joined in January 2019, it was relatively a niche market at the time. I've definitely got an understanding of it now, and I could probably say that I'm an advocate for the sector in terms of peer-to-peer. But prior to joining, I didn't have a great deal of knowledge in peer-to-peer. But it's amazing what you can learn in a short space of time.
You say kind of opened up your eyes to a whole new world that you probably didn't pay much attention to, especially coming from, if you're working in the mortgage side or even banking. A lot of people who work in those sectors just don't have really any experience or knowledge of what we do and what you do in the peer-to-peer world, right?
No, exactly that. So yes, it was a challenge at first, but as I said, I'm an advocate in the sector, and I've learned a lot over the time that I've been here.
Was it very foreign to you when you came in? Did you think, wow, I mean, this is hard to get grasp exactly how the system works, or was it something very natural that just took a bit of time and then you really understood what it was all about?
Yeah, I mean, it's like everything. I'm a person that can adapt very quickly, so once I've learned something, it sticks, and then I'll just continue to learn and learn and learn, and this is where I am today.
Okay, so you weren't then you didn't invest in any peer-to-peer lending prior to Kuflink, I take it, because you sounds like you didn't know much about it at the time, so it wasn't something you were putting your own money into. Is that correct?
No,
Okay.
no, at the time, no.
Okay.
Not to say that I'm not invested now, but
Oh, okay. Yes, and now you have opened eyes now. You can
exactly.
the wonderful world that we live in. So, Hiran, what are the key principles that you look for in a deal when you're assessing risk on a platform? Because it is I would imagine quite challenging, because it's sort of a minefield, isn't it? You got to be careful on what you take on, what you approve. What are the key principles that you look for in a deal, and have these principles changed because of what we see in the current market conditions economically?
There's three key principles that we look for in a deal. The first being the person. So we'll look at the person that we're lending to. We'll undertake KYC, know your customer, which will involve credit checks, ID checks, address verification, anti-money laundering checks. We'll do background checks on Google to see if there's any adverse publicity. We'll look at Companies House to see if there's any adverse information on there. We'll do bankruptcy searches. We'll go through the borrower's bank statements with a fine-tooth comb. We'll look at their previous experience. We'll look at the loan purpose and whether it actually makes any sense. We'll look at whether they're UK national, foreign national, loan to values that's required. So there's a lot of information that we'll look at in the first key principle being the person. Second key principle being the property. Mm-hmm. So what type of property it is, whether it's residential, semi-commercial or wholly commercial. We'll look at the location, because that's a big factor in terms of determining what sort of level we want to lend to, depending on where the property is located. It needs to make sense loan to value wise and location wise. If we have an asset that we need to recover, are we going to be able to recover it quickly? Are we going to be able to find a buyer that's going to buy it at a rate which is going to be sufficient to repay our investors? Mm-hmm. So all of those things come into play. When we're looking at the property, we'll look at any existing planning, what they're proposing to do to that property during the terms of our loan. If they're proposing to do anything, whether it's for buy to let, whether it's for a business purpose, whether it's just purely investment. So yeah, there's a number of things we'll look at. We'll instruct a valuation on that property so that we've got a qualified risk surveyor going out to the property to give us further information and comparable evidence. And if there is anything that's highlighted in those reports, then we'll look to tackle them or condition them as part of the loan. Mm-hmm. The third key principle that we'd look at is obviously the exit. If the exit strategy from repaying our loan doesn't make sense, then is it a loan we should be doing? No, because ultimately we're a bridging lender. We need to ensure that the exit is there to be repaid in a timely manner. And if it makes sense, then of course we'll look at it. Is the term sufficient to exit the loan? That's another thing we'll look at. So these are the key principles that we would look at in our assessment of any deal that comes over and it's passed over to the underwriting team. These are the key things that you would look at for any application.
Have any of those principles changed, just even through how strict you are, because of what you've seen in the market conditions with interest rates rising and just economically difficult conditions at the moment? Have those principles had to have been adjusted at all? Were they less stringent before and more strict now?
It's not so much that the principles would change. The principles are always going to be the principles that we're going to look at, regardless of what the market conditions are. So we're always going to look at the person, we're always going to look at the property, and we're always going to look at an exit plan to ensure that we're repaid. What we would look at changing is the criteria and how we're going to look at adjusting that to fit the current climate. So market volatility at the moment, where we were previously lending 70% on a commercial asset, we wouldn't now look at that as 70%. In the current climate, we'd look at 65. We may look at a lower value depending on where it's located. So it's very much a case by case basis. Due diligence. Our due diligence is, I'd say, we've got a very experienced team, and the team at Kuflink is good at doing what they do. And that goes from the sales team through to the underwriting team, through to the loan management team, through to the senior management team. So as long as the deal makes financial sense, then simply we'd look to write the business. Again, if it doesn't make financial sense in the current climate, then it's not for us. The mindset within the business is very much in terms of if you wouldn't invest in a property with your own money, then how can you expect an investor to invest in the very same deal with theirs? So if that question can't be answered when an application comes to an underwriter to look at, then unfortunately it's not for us.
You get the old denied stamp. They still do that? They actually stamp it with a denied?
No.
It doesn't.
I mean, we are very stringent. So in terms of the level of inquiries we see, it's like a big funnel. So 80% of the deals that potentially come across the sales team's desk doesn't actually make it through to application. So the filtering process is stringent, and if it doesn't meet our model or mantra and the maths doesn't make sense, then it's not a deal for us, unfortunately.
Yeah, no, I totally understand. There is a certain amount of unknown, isn't there, when you take on, I think, there has to be a degree of unknown risk, right, where you put your faith into the research, you put your faith into the numbers, you do your due diligence. There's going to always be a little bit of an unknown factor. What does Kuflink do to reduce the risk on that, on the whole entire loan, knowing that there's somewhat of an unknown piece to it? Is there certain types of checks you can do? Because I've always personally thought that it usually comes down to the person pretty heavily weighted, because if somebody is on the up and up, then you can look at the numbers, right? Because you always have those odd cases where somebody's not on the up and up and they're maybe trying to pull a bit of a fast one. But as a whole, how do you reduce the risk within the loans that you are looking at and approving?
So within the loans that we look at, I mean, each loan is managed on a case-by-case basis. They're very, very different. In terms of reducing the risks within loans, we would control these by adding a certain number of conditions either prior to the loan completing. So if someone potentially has a CCJ that's come up on their credit file, for example, and their exit is to refinance, we will insist on that being repaid and evidence prior to the loan completing, to ensure that if it's a 12-month loan term, they've got 12 months clear from any adverse and they're still able to achieve a refinance. Another scenario would be we've had a valuation report done. The valuer has identified some damp issues and it's a purchase of a property, so ultimately they're not going to get the work done before the loan completes. Why would they if they haven't purchased it? So we may impose a condition on the basis that the loan is completed within a set time period. potentially a month from when the loan commences. We've got our own asset manager in-house that will go out to the site if need be to ensure that the works have been satisfied. We've got a fantastic loan management team that will follow up swiftly on any of the conditions that have been imposed by the underwriting team to ensure that the conditions have been complied with. So in terms of managing the risks within each individual loan, we are very, very good at doing that.
Hiran, so the economy, I think from an outsider view, I'm looking at things, I'm a little bit distressed about what's going on. Well, more than a little bit. If anybody's watched the stream, they know that I'm a bit of a panicker when it comes. So I see the writing on the wall for the economy. I would consider it to be maybe in a bit of a spiraling point at this stage. I don't know if that's true or not, but that's just my opinion. How has Kuflink managed to protect itself as a business and also its loans during this spiraling economy?
So, I mean, I'll be honest, it's been a spiraling economy since I joined in January 2019. I think we've had a challenge every single year that I've been there. I mean, it started with Brexit, then it went on to COVID, then you've got the war going on in Ukraine, and now we've got inflation and increase in interest rates. So, I mean, the mini budget in September, obviously it spooked the markets, sent the pound tumbling, forcing the Bank of England to intervene and start increasing interest rates. The challenge has been not solely down to interest rate rises being the issue, but it's also the speed in which the interest rates have been applied. So we've seen interest rates increase 12 times in a row, increase today, gone up to 4.5%. And it hasn't really allowed enough time to allow the market to absorb any of the rate increases that have taken place. And of course, inflation at the same time has been very stubborn in coming down to a manageable level. So yes, there's been challenges in terms of how have Kuflink managed to protect themselves in this instance. We've got a solid and experienced sales team, underwriting team, loan management team, and a senior management team as well that can all recognise risk, and as a team implementing measures, always look to mitigate the risk as quickly as possible. So as a business, we are very agile and we're able to implement changes very quickly. We can change our criteria very quickly. We can change our policies very quickly. And this is what we did as a result of the mini budget. The following day, we'd implemented reduced LTVs on our loans. We changed our criteria. We changed our policies. There's a lot that's happened since September 2022. Reduced loan to values being one. We'll look at the loan size, be a bit more due diligence with the loan size and the loan to values that we're offering. We've removed our MES product that we were offering. That's no longer an option. We've reduced our second charge lending. We won't consider it unless the LTV is no higher than 50%. I know you don't like second charge lending, do you, Lawrence?
No, I don't. You're right. You've done your research.
Yeah, I have done my research. So yeah, I mean, the maths, if it doesn't make sense, then ultimately we won't look at it. We've survived this long. We've grown in a climate since 2019 that has been challenging as a business, and will continue to grow. And when the market does recover, we're going to be a force to be reckoned with. Yeah,
good.
We're not offering service loans anymore. We're only looking at retained interest on our loans. In terms of existing borrowers, the ones that are looking to reterm or renew their loan, we're not doing it as we were previously. We're asking a lot more evidence, a lot more questions. We're asking for valuations to be evident from incoming lenders, offer letters to be provided. If the exit's for a sale, we're looking at evidence of sale progression via legals being instructed. So we're doing all the right things that we need to do to continue to grow.
Very good. Okay. And quick interlude here again. If you can hit the thumbs up button on the stream, it's really helpful to the channel. And, obviously, it's not much to ask. Takes a second. Maybe you hurt your thumb doing it. I don't know. But just hit the thumbs up button. That's all I ask. Hiran is here. Chief Risk Officer from Kuflink, answering some interesting, I think, questions about risk. We'll continue on. Let me see. What else do I want to ask you? Okay, so you joined in 2019.
Yeah.
You were new to peer-to-peer lending. Obviously, you've seen things in the sector change since 2019.
Definitely.
How has it changed in your view from when you came in 2019 to 2023 now?
So in 2019, it was a lot easier to invest. There's been a lot of negative publicity within the peer-to-peer market. Since I've joined, we've seen casualties in the peer-to-peer industry. We've seen risk warnings now having to be put on all the advertising. We've had to stop our promotions, refer a friend, new investor bonuses. We've had to introduce an appropriateness test for our investors. And there's also a 24-hour lockout period from sign up to investing to stop and protect investors from investing on a whim. They're the changes that we've seen. We've seen other peer-to-peer companies offering higher rates, and where we're in a market where rates are increasing, effectively they've priced themselves out the market as a lender because the rates that they're offering, if they're having to increase them further, it's just not a sustainable business it's just not a sustainable business. And vice versa, we've seen platforms that offer lower rates, where the Bank of England has surpassed the rates that they're offering, and the business model just doesn't support the increased rates.
Yeah.
So it is a challenging sector.
Yeah, I understand.
But we are doing the right things. Our rates aren't ridiculous. They're in line with our business model. If we need to make changes, and there are changes from the Bank of England, we're able to do that and continue offering the product that we offer.
Yeah, and I know when I have guests on here and from different peer-to-peer companies, I want to ask them a bunch of questions about the business and kind of the products they offer. But I also want to clarify that you really only deal with risk. You don't have really anything to do with the products that Kuflink offers. The decision on how much interest is going to be offered to investors. That's kind of not your thing, right? You're just strictly focused on the risk side of the loans, correct?
I am mainly focused on the risk side of the lending aspects of the business, which protecting our investors, protecting our borrowers.
Yeah,
as well.
that's why I didn't want to bombard you with product questions, because I know that's not your side of the business. So what I'll have to do is get Narinder on here and hit him with all those product questions and business questions, because he's more involved in that side of the thing, I know, than the risk people are. So
yeah, he did say he wants to come on and have an interesting conversation with you, Lawrence. So I'm sure he's open to the invitation.
He sent me an email earlier, by the way. He said, "Be nice to Hiran." He said, "Poor lamb. Be nice to him. Don't give him too much of a hard time." So this is a question I wanted to ask you. Was Kuflink implemented to help the business in a sector that's destined to suffer in the short term? So we've got this Office of Budgetary Responsibility that's predicted, I think, a 10% fall in the housing process. What's Kuflink's expectations regarding to that?
Honestly, if I had a crystal ball, I'd be able to give you a more definitive answer. I mean, economists more recently than ever have known to get it wrong. I'm not saying they are wrong.
Like the weatherman, pretty much.
Yeah,
a lot.
yeah, exactly. So, I mean, house prices have they've risen considerably in the last couple of years with the pandemic, stamp duty holiday, bringing about a more volatile market. The property market boomed in 2021. We saw buyers rushing to take advantage of the temporary cuts to stamp duty. Figures from Halifax show that house prices between January 2020 and December 2022 rocketed by about 20% in that short space of time. So was it a false economy at the time? Potentially. The number of purchases now are a more realistic level, and they're much closer to pre-pandemic levels. In terms of what has Kuflink implemented, we've implemented increased rates. We've seen that high street lenders are offering between 4 and 5%. We've increased our rates to investors. We're now offering up to 9.73%. Reduced LTVs for our loans, depending on the property type, location and amount. I've gone through all the due diligence and how we changed our criteria. And we're working very closely with our borrowers to ensure that exit can be achieved in a timely manner. We're asking for a lot more capital reductions than we ever have done previously. And we're asking for larger amounts as well, which all get repaid to investors. We're looking at evidence of an exit strategy with the ones that are requesting a time extension. And we're only renewing the loans that we feel are making sense, and we can see that an exit is close and in sight. So we've implemented a risk committee where we'll sit down regularly to discuss all things risk, whether that's internal factors, external factors, competition risk. We've had a recruitment drive, and we've recruited in the right areas to bring in some new lifeblood into the business. So yeah, we're doing a lot to try and stay ahead of the curve, and continue to grow in the short term and the long term in a climate that's currently not great.
Yeah. So, having
on a positive,
no, go ahead. Yeah, that's right.
Yeah, I mean, on a
Continue.
positive note, interest rates at the end of this year, I would expect to start coming down. We can see that high street lenders have reduced their rates on 5-year products. Skipton have over the last couple of days introduced 100% mortgage product, and I'm sure the other high street lenders will follow suit. So if that's anything to go by, this is a short term problem, and in the longer to shorter term, 3 to 5 years, I can see us coming through the other end a lot stronger and a lot more successful.
Yeah, we'll have to come back to that, because see, I have a bit of a different view on interest rates personally, and we'll circle back in maybe a year or two. But my thesis on it, Hiran, is that the inflation is going to be a problem that is not going to be fixed by these interest rate hikes so quickly. And I think you will see the interest rates come down temporarily, but I think what's going to happen is inflation is going to spike back up again, and economies like the US and the UK are going to be forced to put those interest rates back up. Just my prediction, because there's nobody buying the debt. That's one of the biggest problems. But anyway, that's a conversation for another time. I just wanted to throw that out there.
We'll have to agree to disagree on this one.
We'll see what happens. You know, in the U.S., so the second biggest debt holder in the U.S. is China. And if you look at the numbers of what the Chinese are buying debt-wise, it's gradually falling down. They don't want it anymore because of a certain Mr. T decided to piss off the Chinese with his comments, and now they said, oh, we don't want your debt anymore, and now there's nobody to buy all this debt coming out. So there's kind of a little volcanic bubbling under the debt surface that I think is going to erupt. But we'll see. I hope I'm wrong. I hope so too. I don't want to be a doomsday person, but I see some issues. So you coming from a background of working in several different industries prior to peer-to-peer lending, you know that one of the biggest complaints with lending is it just takes forever to get money and to get loans agreed. I'm going through it right now with a family business property that we're trying to sell to a tenant. And this thing has been dragging on for months, and it's through a high street bank that they decided to do the loan with. And I think we're in month number 6 trying to get this loan done. And it just takes forever, and it just grinds on and on. How does Kuflink tackle that problem to get the money into the hands of the borrower in a faster manner so they don't have to go to these high street banks to borrow money because it's just so slow? How does Kuflink do that?
So we are looking at this actually, and we're looking to bring in new products and services that will speed up the process even faster than what we're doing it currently. I don't want to say too much at this moment in time. We have introduced AVMs, which is an automated valuation model, which the high street lenders use to run a desktop valuation. So for residential transactions, we have that option available as long as it meets the criteria, which takes away 10 days, a week to 10 days for a valuer to be instructed, go out to the property, write up his report and send it in to us. So automatically you're saving 10 days on the process of getting the loan through from the point we get the application to the point we complete. And with those types of products, we can complete the loans within 3 to 4 days from the point we get the application through to the legal due diligence being done, through to it being offered and invested on the platform.
That's fast.
And filled by our investors. So
wow.
This is something we're working on. We've already completed a fair few deals using the product, and we've had deals repay with money back to wallets for investors that have invested in the AVM loan product with us. So it's moving in the right direction, and there's other processes we're looking to implement which is going to speed it up further.
Blockchain. You wait and see. Blockchain is going to be one of the answers to this problem of verification of things like documents and making sure that people own the right stuff, because I believe that blockchain could be used, well, I know it can be used to verify things within an instant rather than things taking, hours or days to verify. So another thing, but not to do with this conversation today. Okay, so you came as in, right, non-really informational about peer-to-peer lending. You didn't know much about it in 2019. That was the year when there was some company failures, probably maybe 2018 before you came in. It was starting to happen in 2019 too. As somebody who is in, I would consider a growing business that hopefully behind the scenes is healthy. I mean, us as investors, we look from the outside. We don't always know what's going on behind closed doors, but we presume Kuflink to be healthy. What's your view on the peer-to-peer sector failures that you've seen happen since you started working within the industry?
It is disappointing for the sector because it leaves a negative stigma, and it makes it even more challenging in a challenging sector, which has come about due to the failures that we've seen. From a point of view of what Kuflink is doing, we're still here. We're making profit month on month. We're doing all the right things. We're not offering extortionate rates to investors to entice them in. We're offering reasonable rates, which provide a good return, and we are still lending to the levels. We're currently seeing applications at the levels they were during COVID, when we were seeing a massive increase in applications. So from a business perspective, even though it's a challenging market, we've tightened our criteria. The volume is increasing. So it's all very positive, and we plan to be around for a long time to come.
And
We've
then
got the right team there to ensure that the business succeeds and continues to succeed for the future.
Okay. And piggybacking off that question about the failed companies, and I always ask people who come on the stream this because it's interesting to get a perspective of what different people's opinions are on this. But if you're somebody who's watching the stream, you're an investor, and maybe you've been burnt by some of these failed companies, maybe one, maybe in my case like 5 of them I've been burnt by. But I still continue to invest because I don't think everything is bad. What advice would you be able to give Hiran, especially coming from the risk side of things? Were you one of these people that used to quantify risk when you were younger about what is the percentage chances if I get in this car with this person that I'm actually going to make it to the end of the journey? Were you really risk focused? Have you always been like that or not?
I've always looked ahead and thought about my options and the consequences. So yes, that mindset has always been there, and it stood me in good ground as I've gone through my career, gone through my teens. So yeah, I've always had that mindset that risk has always been a factor.
Good. So this question is going to be good for you then. So let's presume you're looking from the outside, right? You're an investor. You got some cash. You want to put it into an investment through a peer-to-peer company. What advice would you give that person who is looking for, and I use these in quotes, safe, because nothing is 100% safe, right? Even banks, as we've seen recently due to the bank failures. But what advice would you give to investors here who are looking for reputable and safe peer-to-peer lending companies to put their money into the loans?
I'm going to answer that with 3 words, Lawrence. Invest with Kuflink. Asset-backed investments. We've had £260 million invested to date. 0 investor losses to date. So our past performance speaks for itself. We're doing all the right things. And what other platform is there to invest in other than Kuflink? I mean,
that was a very political answer, but I like it. It's. Let me ask you this then. On top of that, let's say people don't know anything about Kuflink. Okay, what could they do to better inform themselves that Kuflink is a good place for them to invest? Can they pick up the phone, have a chat with Narinda, the CEO, to make themselves feel better? Is there some due diligence that they should be doing behind the scenes? Should they talk to Gobinder or Harry? What do they do?
Give us a call. I mean, we've got a fantastic investor relations team. We've got Gobinder there at the helm. We've got Lisa. We've got Carolina. They're all very knowledgeable, and they can hold your hand through the process and tell you everything you need to know in terms of investing and getting you set up to invest.
I think I think that's important too, because that's not something that's available to most investment sectors. Like if you want to buy a stock or invest in a mutual fund, you don't have access to the people that run those companies, right? They're not accessible to your average investor. You just have to go off what you read. But within our sector, you guys as investors do have the option to reach out to the people involved with the companies, because it is a smaller sector, and most of the people that own peer-to-peer lending companies are actually open to picking up the phone and answering the phone if investors do have questions about their companies. And I don't think enough people take advantage of that, really, and they should, because it is a great way of finding out really about what's going on with the company, and being able to ask those questions, and then come on this channel and look at these Q&A sessions that we do in these interviews. I mean, I have interviews over the last 6 years with all kinds of different CEOs and risk people, credit people, and watch those videos and see what you feel. And too, I also go a little bit off gut feelings and how do I feel about people and the information that they're giving. So, but yeah, pick up the phone or email, call, and get those questions answered before you just go ahead and blindly put your money into an investment, right?
Exactly that. I mean, the customer service and the investor relations team are brilliant at what they do, providing you with all the information that you need to know. Any questions that you've got, they've got the knowledge there to be able to answer the questions and guide you in the right direction. I mean, when I joined in 2019, it was a relatively young company in a niche market, and it's had growth, and that's from continued that's basically, it's seen growth from the loyalty that's been provided by the customers that we have. They've been on a journey with us. So yeah, we like to show off the fact that we've had 0 investor losses to date for our clients. And we also put a lot of detail and effort into showcasing our deals on our award-winning platform. And it all leads to building confidence in our investors who have helped Kuflink fill every deal on its platform to date. So I think what we're doing, it speaks volumes, and it speaks volumes for the team that's supporting our investors.
Okay, Hiran, I know when we started the stream, you said I can only give you 45 minutes. I've already run over by 6. I know you guys have questions out there. Unfortunately, we just don't really have time because I know you have a prior obligation. So there was one let me just ask you one quick question and just take 30 seconds to answer this, and then I'll let you go.
Is it about ice cream, Lord?
It's not about ice cream. Somebody had asked earlier, and I think this is a good one. What is a subprime? What is subprime?
Subprime is adverse. So borrowers who have heavy adverse credit profile, they can't approach their typical high street lender for a loan. Yeah, that's what subprime is.
So maybe at risk people who are more at risk.
People that are at high risk.
Okay. Again, Hiran, thank you so much for taking the time. We are going to get somebody else from Kuflink back on here in a future stream to answer product questions and more intricate details about the running of the company. You are just the risk side, so I really wanted to just focus on that today with you. So thank you for answering those questions and being transparent, and appreciate you very much. I hope it wasn't
thank you, Lawrence.
too stressful for you.
No, not at all.
Okay, all right. Well, thank you, and we'll speak to you soon, Hiran. Thank you.
Thank you very much.
All right.
Thank you.
Bye-bye. Okay, guys, there you have it. It was a bit of a crushed in time-wise stream because he did have a prior obligation that Hiran said he only had a certain amount of time, so I had to kind of rush through that. But yeah, I got a lot of good things out of that. I hope you did. I hope you got some good information about how they handle risk. Don't forget, we'll be back next Thursday with Capital Stackers, who's supposed to be here in April, but couldn't make it, so he's going to be here to talk about Capital Stackers, which I'm interested to know more about what they're doing. They have a very interesting company profile. So come back next Thursday. Thank you to everybody who joined today. Thank you, by the way, much respect to everybody who is a Patreon member and continues to support Financial Thing with your very generous subscription. If you're interested in doing that, go check out Patreon. The link is in the description below. Otherwise, from myself and Harley, who's having a good nap, we will see you guys next Thursday, same time, all being well. Have a wonderful weekend. And yeah, that's it. Take care. Bye-bye.